What's up, cool kids? FD White here. Let's jump right into it, man. A lot of people are panicking. So I gotta come and keep the community well balanced when it comes to psychology. If you haven't watched my psychology video that I put out last week, make sure you go and watch that. We talk about FOMO, we talk about fear, we talk about greed, we talk about price action. We just talk about a lot of things that you guys really need to implement at this moment right now. So make sure you guys make sure you guys subscribe. Let's jump right into it. Bitcoin is sitting at 93,986, so about 94K. This is on the daily. We're gonna zoom out because these intermediate ebbs and flows I don't care about. I'm zooming out and I'm seeing, okay, where's the line in the sand? What do we need to hold? If we don't hold, where are we going? If we do hold, if we start to reclaim certain levels, then we'll get a little bit more bullish. So we had a three-phase plan that did not play out. We got the phase one, we got the phase two, and then we didn't get to phase three. So we'll mention all that. This is going to be a jam-packed video. So like I said, please make sure you like and subscribe. We are trying to grow. We are trying to get the community strong. We are trying to get more of the cool kids to come on over, man, because now is the time. Now is the time. I do not think this is the top of the market. I do think this is opportunity, but we never know. We never know. So we want to be prepared for every scenario that we can, that we can come up with. So, like I said, Bitcoin right now is at 93, 9,400. We did come down to a low of about 91,800, so 91,759 on Bitstamp. I'm on the Bitstamp chart. So, I mean, I got three lines that we really need to hold. Number one, we do not want to take out this yellow line here. This first yellow line coming in at about 91K. So I got about 90 to 91K, and that's this area here, this yellow line here. We do not want to break this. We do not want to come down, and we do not want to close below here. If we do, and this is just a big if we do, we are probably most likely coming down to this 85 to 87,000 level with all this price action right here. We want to hold that. We may get a bounce from here, we may get a bounce there, and we hope to reclaim this and continue our way up. Scenario number two: if we lose this $86,000 level, now this is my line in the sand. Now pay attention to this very closely. This is my line in the sand before I really get worried about where this bull run is going or where this market is going. So let's look at this. If we lose this level here, all this price action here around 85 to 87K, we're most likely coming back down to this CME gap. And this CME gap is coming in at about 76 to 78K. We may get, some liquidity sweeps to come and try to take some of these wicks out. We have one at 74. We have another one at 75. So I'm thinking anywhere in this area here is what I would be looking for if we do seem to lose this second yellow line, where I just put the X at around 85 to 87K. Come down here. We have the 200-day curving up, and then I think this will meet somewhere, like I said, in this area here. So we'll have two strong levels of support coming at this area here. So I think this is the strongest level. If we break through this, hopefully we don't. Hopefully we continue our path forward and just make a higher low here. But if we lose this, come down to about 85 to 87K. If we lose that, this is where I would probably bid hard and bid long. Just because, like I said, we have this 200-day curving up. Then we have the CME gap right here at about 77K with a nice, amount of price action coming right here. And this is the level. This is the level for me. We don't want to lose the 200. Usually that 200-day moving average tells you if you are in a macro bull trend or you flipped and now you're in a macro bear trend. So I really would want to hold this level. And I'm not even going to talk about levels below that 75 to 77K area. It's just where I'm gonna stop. We need to keep those three levels, in our minds. And I'm putting everything in the Telegram, the Cool Kids Alpha Group Telegram. So make sure you go in the description below and sign up or subscribe to my Telegram channel. I had to restart it, so we don't have many subscribers in there now, but we're gonna grow. We're gonna grow quick because if I've been here through the bear market. I've been here through the ups, the downs, the ebbs, the flows, and I'm gonna keep keeping everybody up to date. Altcoin, well, we do have the stock market is closed, so we don't have anything pulling us up, pulling us down. Tomorrow is key, though. So we have to pay attention to tomorrow, but we'll talk about that in a second. Right now, altcoins are bleeding. We have Ethereum down to 3,300, basically. AVAX down about $37. Coin at $5.24. Dogecoin down to about 32 cents. What else is a lot of people looking at? Gold is, oh my God, down to 36 cents. Wow, I haven't seen this in a while. I might have to bid some gold. Actually, let me look at gold. Jeez Louise. We lost this major trend at about 40, 39, or 40 cent. This major line in the sand that I really wanted to hold. So gold is not looking too good at the moment. Ondo lost a key level at about $1.45. So we're coming down to levels. We're coming down. You see, I already have these levels drawn out and they're hitting them perfectly. So we got the 200-day coming up for Ondo as well. So I would say at about a buck. If we keep coming down, I would be at Ondo anywhere between 85 cent and $1. ADA is back below $1 at 92 cent. SUI is back below $5. So I mean, altcoins are bleeding right now. Bitcoin dominance is sitting at almost 58%. So we got to keep watching it, man. As long as Bitcoin is bleeding, as long as Bitcoin continues this path downward, altcoins are going to bleed too. Next, I want to talk about. I want to go over to X and I want to talk about a couple tweets that I've seen that I bookmarked. So Miles de Chitcher, I can't pronounce it. I can never pronounce it. I need to ask him how to pronounce his last name. But he said, "Here's an interesting thought. What instead of a 4-year cycle, we're in a new paradigm of many cycles, echo bubbles, where the select sectors outperform. Makes sense due to the institutionalization of Bitcoin, maturity and saturation of the altcoin market, rapid growth of new sectors like AI, DPN, etc. He don't fully subscribe to one or the other. He's talking about, one thesis or the other. He thinks the validity in looking at historical data, cycles, seasonality, but I also think the market requires more nuanced take than that due to how it's mature. So the market is a little bit different. Like it first became different, in my opinion, when we first broke all-time highs before the halving. Then we kind of got back on the same equilibrium as in the past or the past cycles. But one thing that really stood out to me is meme coins were usually a top signal. Now they kind of led the bull market. Now of course, we've adjusted to like AI and things like that for the bullish narrative. But I mean, this cycle is a little bit different. We can look at retail. Retail is not here. I think I have something talking about retail. Let me see. So it says Bitcoin volatility is actually historically right. It's historically low right now. That's not it. Okay, here we go. Bitcoin on-chain retail demand is nose diving to historic lows despite Bitcoin pushing around 100. So this run is being driven by institutions, ETFs, and nation states. So we talked about this. Even if you go on Google Trends, you can see the search term Bitcoin is not even, it's not at peaks like we saw back in the past cycle. So it's really, really, really institutionals, ETFs, nation states that's pushing this narrative up. Retail is not here yet. So this is one of my things that I've been thinking about. Like, I don't know how far we could go down because usually retail is the one that, buys the top and then we just dump all on retail. But who's going to dump on the institutions? Who's going to dump on, the ETFs, the nation states? Not saying we can't go down, 20, 30, 40, 50%. I don't think we're going to go down like 80%. So even if 108 was the top, I don't know if we're going to go down 70 to 80%. This Bitcoin, if we do go into some sort of a lull or some sort of a mini bear market, so to say. But this is one of the things that has been pushing crypto down. I know everybody's talking about this right now, but I will mention it really quick. It says the DOJ was cleared to sell 6.5 billion in Bitcoin that was seized from Silk Road. If you don't know what Silk Road is, it was a website where people sold illegal things and they purchased it in Bitcoin, or you could buy it in Bitcoin. So the United States seized all of that Bitcoin. So they have 69,370 Bitcoin that was seized. So I think that's like coming up to like 6.5 billion. Yeah. So this has been out since the 30th, but we're just now starting to hear that I think yesterday, the day before. So this has been out for a minute. Like I said, it's really started to just circulate the through the through the critter cryptoverse, and a lot of people are panicking. So if they do start to sell, I mean, they have a lot to sell. They have a lot to sell. It wouldn't be the end of the line for Bitcoin. Bitcoin wouldn't be over, but it would be a nice pressure or nice sell pressure down. And I think it would be opportunity because our long-term thesis is that inflation is ramping up. Everything is going to start getting expensive again. Asset inflation is going to come back in a very, very, very big way, and assets are gonna moon. It just depends on your time frame. If you're thinking about the next 2 weeks or the next month or so, you might need to broaden your horizon or push your time frame out a little bit more. So holding these altcoins, holding a lot of the altcoins, meme coins, and things like that, they're getting rinsed. They're going to get wrecked if Bitcoin does break these levels that we talked about earlier, but we know Bitcoin is going to bounce back. So that's really not a concern of mine. Next, I want to talk about the hash rate. So you have the hash rate, which is, well, if you don't know what the hash rate is, a Bitcoin hash rate refers to the total computational power used by the Bitcoin network to verify and process transactions, measuring the speed at which miners can solve these cryptographic puzzles to add new blocks to the chain. So a higher hash rate indicates greater network security and decentralization, which is good, which is what we want, as it becomes more difficult for malicious actors to gain control due to increased computing power required to attack the system. So if we look at the Bitcoin hash rate, so this is just separating the network from the actual price. So Bitcoin as the network, this is where, I mean, we're almost at all-time highs for the Bitcoin hash rate. So the Bitcoin network is working perfectly fine. This is looking very, very good for the Bitcoin network, not the Bitcoin price, not the Bitcoin, all that other stuff, for the actual network. Because Bitcoin is a technology, Bitcoin is a network, Bitcoin has a protocol, and it's looking very good when it comes to the hash rate. So that is some good news if you do pay attention to those things. Most people just care about number go up, and most people just care about everything, going to the moon and things like that. But when you talk about Bitcoin, you have to talk about the actual technology and talk about the actual network as well. So we are getting a small little bounce in Bitcoin at 94,171. Like I said, I really just want to hold this. Nope, wrong chart. I really just want to hold this level here. I really want to hold this level here. And a lot of people are looking for this to do something like this. They're looking at something of a head and shoulder. And let's do the measured move for the head and shoulder. So how you do a head and shoulder, you take the head to the neckline. Let's make that a little bit thicker so you guys can see it. And if I pull that, you pull it down to the neckline. Let's do it here. You will be looking at, wow, a price target right at our zone at about 77K, man. So I mean, this is on the table. This is definitely on the table. And I think, if we can, I want to hold the line here. I don't even want to retest or come down here and start to hit these areas down here, man. I really want to hold the line here, and I really want to bounce here. Maybe we get some type of flush out right before the election. I mean, right before the inauguration. Maybe we do come back down here to wash some people out and continue our way back up. But how I'm playing it, to be completely honest with you, I'm not longing. I'm not trying to catch any falling knives. I'm not trying to predict the market. I'm not trying to come on here and act like I called the bottom. I called the bottom. Everybody takes clout and calling the tops and calling the bottoms. I'm not doing that. First and foremost, back to my phase three, my phase three plan. Phase one, reclaim this 20-day modified moving average. That's phase one. Phase two, reclaim 100K. Let's get this out. Reclaim this around here at around 100K. We want to reclaim that. Phase three, well, I think I have 3 phases, but really it's really 4. So reclaiming that 20-day moving average, getting back above that psychological and technical 100K, then breaking back above this resistance at about 103, 103K, because we can just say this was a deviation. We could say the all-time high was a deviation, and we can say that this 102 to 102.5 to 103 area is really the line that we need to break above and hold, hold, and then pop up. This, we could just actually call that a deviation. So that'll be what I'm looking for right now. And then we did have, let me see where it is. Let's go to my last chart, and then I can show you what I will be really looking for to continue our path forward and continue to go back to 120, 130. I won't want to get all back through all those phases and get back into here. And this is be coming back in at all-time highs now, where we're at right now. So we'll reclaim this and get back to all-time highs. So I really want to reclaim this channel that we ran. It was a great channel, a very, very great channel. So I want to flip this back, and then we're gonna blast off. I think we're gonna blast off. Really think we're gonna blast off. Even if we just pull this out, and if we reclaim, let's say we reclaim sometime at the end of January, beginning of February, break back above those all-time highs. The top of the channel would be somewhere in the 120s. And that's where a lot of people are saying that the top might be in. Me personally, I think we may get some sort of emotional move. Let's pull this back out. I think we might get some emotional move, maybe up to 140, 130, 150 possibly. And then I think we'll get a huge correction. That's what everybody was talking about, getting a huge correction from like 125 to 150. So we don't predict the markets. We don't try to predict the markets. We try to come in with the level head, and we try to take what the market gives us. Take what the market gives us. We're going to talk about altcoins in a later video. Right now, I just want to keep the cool kids updated. Make sure you, if you can trade this, it is a trader's market. If you want to short, if you want to long, we're getting a lot of whipsaw action. So I do have some links to BYDFI and Bitunix, a little bit, down in the description below. So I am an affiliate of those too, and I do like them. I actually used them before I even became an affiliate, and that's why I wanted to become an affiliate. So I do like those exchanges. Really clean, really seamless, pretty good fees over there too. And then also, if you want to join the Telegram, like I said, the free Telegram where I post most of my charts and all my thoughts, then the Cool Kids Alpha Group link will be in the description below as well. So that's pretty much it, man. Make sure you guys like and subscribe. Stay tuned. Don't panic. Don't panic. That's the number one thing you don't want to do. Look for opportunities. Look for opportunities, and stay in tune to the market, because this market is ever changing. Tomorrow, before we get out of here, I'm sorry. Tomorrow, this is what we want to look at: forexfactory.com. Tomorrow is going to be a big day in the markets. We have the unemployment rate supposed to come in at 4.2. Predicted as 4 was last month. It was 4.2, saying it's going to come back in at 4.2. If this goes up, markets will probably like that. Markets don't want a strong economy because they want interest rates to be cut. We also have non-farm payroll employment. Last month, or hold on, let me show how this. So previous forecast. Okay, so previous was 227,000. Forecast is 164,000. So non-farm payroll, they want this down. You want this employment to come down. Unemployment, you want this number to go up. We do not want to see, well, not we, because I want to see people having jobs. I don't want to see people unemployed, but the markets do not want to see a strong economy, because if a strong economy means the Federal Reserve can hold interest rates where they're at, very high, for a very or longer period of time, and they will not cut rates. Without the rate cuts, puts added sale pressure on risk assets. So they want the economy to fall, or the economy to be a little bit weaker. So we want this number to come in lower, and we want unemployment to come in higher. So that's what we'll be looking at tomorrow for Friday. So make sure you're in tune to everything that's going on. I will be updating the community every day for the foreseeable future. I might be at my computer, I might be in the car, wherever I'm at. I will be updating the community, and like I said, I'll be putting it in the Telegram and some on X, but I'm really trying to build my community. So a lot of stuff will just be in the community parts that I have, and I will be, my Discord is coming as well. So make sure you tuned in. And that's it, man. That's it. Stay the fort. Don't panic, and I'll talk to everybody in the next video. Have a good day.